Welcome to the webinar. You have entered as an attendee mode.
Right, so far I've looked at like J&T, FedEx. Oh, FedEx is really, really expensive. Right, FedEx is super expensive. FedEx is like, how much is FedEx? FedEx is $484 and like $277. Yeah, it's so expensive for FedEx. Right, probably I need to do some more research, right, to kind of see which career has the best rates. Right, because it doesn't make sense, lah, right? That doesn't make sense, right? Welcome everyone. Right, for those of you that just joined, good evening, good evening, good evening. And guys, right? So I just bought this. Oops. I don't know if you guys can hear it, but I bought this new pen. I don't know if it's gonna make too much of a noise. Do let me know on the chat if it makes too much noise. Okay, while we wait for the rest to join, good evening, good evening, good evening, everyone. Welcome back. Okay, later we'll go through some of the trades, right? Some of the updates. Okay. Good evening, good evening, good evening. Q session today. I don't know why. Right? I think every day for the past week, right? Every day for the past week, it has been raining. Right? Today in the afternoon, I actually went out as well. It was raining. Yes, can you guys hear can you guys hear a sound? I don't know if you guys can hear it. Oh, Kelvin, help me out. Can you hear a sound, Gary? Oh, is there a difference? I don't know. Because I got myself a new table fan, like to kind of keep me cool, right, during the webinar. Good evening, good evening, good evening. Okay. Now, I want to look at the economic calendar first because I don't want to be blindsided again, right? So let's look at the economic calendar and see what. Hold on, let's see what we are up against today, right? Okay, so in 24 minutes time, right, we have retail sales, we have inflation, core inflation, we have so many other things, right? We have retail sales coming up, core inflation. Okay, so this is in 24 minutes time. Now I just want to quickly hop back to our Euro USD. Now Euro USD trade, we are currently in this trade right now, and this trade obviously is not going as planned, I would say, right? I would expect it to hit my stop loss, lah, right? So I'm just gonna let it play out, right? I'm not gonna do anything to amend the results or anything. Right, just I'm gonna let it play out. But of course, if it hits our stop loss, then of course we do have an additional sell limit order, right, on Euro USD. Okay, so for Euro USD, for those of you who have not entered the Euro USD, because this one I want to go through first, right? Because I think this, because later we have a USD impact news coming out, right? So I want to go through, I want to go through the Euro USD trade first. Okay, so Euro USD, right? Now, if you are not in the first position, right, we are still, I don't think you should enter the first position. Since we're already in, we are floating in losses right now, but we have a secondary position that I'm actually quite interested to take. Right, so we see how it goes. Okay, cool. Cool, awesome. Okay, just give me 1 second, guys. Let me just settle some stuff real quick while we wait for those of you who are not here, right? You guys want to enter the Euro USD trade, right? Go ahead and do so. This is the second position, so I'll only be focusing on the second position, to be honest, right? Yeah, because the first position is it's already in losses, right? And I'm expecting, right? I cannot 100% confirm that it's gonna hit my stop loss, but I'm kind of anticipating, right, that it will hit my stop loss. So I'm just gonna keep a close eye, right, on the Euro USD. Okay, right. Give it a few minutes, right? For those of you who wants to follow the trade, can go ahead and do so. I have so many things planned out for this year, sorry, for this month. And I don't know if I have enough time to finish everything. You know what I mean? Sometimes you just have to. Sometimes you just plan, right? Sometimes you just like plan so many things, right? And then of course, when it comes to when it comes nearer to the date, right? And then you realize, hey, actually, I don't know if I have enough time, to finish up so many things, right? Because yeah, so what we can do is just to sometimes we have to shift things around and hope for the best, right? Exactly, bro. So Euro USD, let's just wait for Euro USD. And then of course, once we are done with Euro USD, okay, everyone done on Euro USD? Nicole, Peggy, Vivian, good evening, good evening, good evening. Okay. Okay, awesome. Awesome. Okay, now, so this is just the quick updates, right, that I have for you guys. And then of course, if we were to move on, right, because this is because we have the inflation coming out, right, and of course retail sales, bunch of other stuff coming out in 20 minutes time, right. So we want to what I want to do is I want to try to actively catch the trade if I can, right, on Euro USD. Okay. Now, ladies and gentlemen, welcome back to yet another session of the evening webinar. Good evening. My name is Rizak. I'm a professional forex trader. Okay, I don't want to introduce myself. My name is Rizak. I'm a trader. Been trading over 6 years already. Currently managing funds over $70 million. Been coaching for this is my 5th year now, and been fund managing for about 4 years now already. Right? Good evening. Okay, now certain things I want to go through first, right, before we start today's webinar, right? Okay, so XM is currently hosting the social competitions. Now, these social competitions, there's no entry fee, right? And it's completely free to join. You can even join it via your demo account, right? So you don't have to risk your real money. Okay, and I think everyone should just make use of this competition. Okay, now the other thing is that on the 6th of June, right? 6th of June, right, there will be no webinar, right? And because now 6th of June, there will be a webinar, right? There will be a webinar by this guy, Habib Akiki. So I would not be hosting the webinar on the 6th of June, right? And the time for his webinar, right, Habib Akiki, right, it's from 7:30, right, to 10 p.m. Okay, right, 7:30 to 10 p.m. Right, they're talking about crypto CFDs and stuff and things like that, right? Honestly, I would like to trade. Sometimes I do trade crypto as well, but not as often, right? Not as often because crypto is it's purely based on supply and demand, and there's not much of fundamentals to it, right? But of course, things are beginning to change because right now, right, we have financial institutions coming in, right, where all the big monies are coming in, right? So when big money coming in, then of course, they will be more inclined to sway with fundamentals, right, such as employment, unemployment, right, imports and exports, trade balance, right, GDP, interest rates, inflation, stuff and things like that, right? Okay. So yes, now the other thing I want to go through. Okay. So for those of you who have not followed me on my Instagram, go ahead and do so. Right. Sometimes I give trading tips, right? I give trading tips on my Insta story. So it disappears after 24 hours. But yeah, so sometimes urgent trade updates, right? Or certain things that you should look for. You should look you should pay attention to in the markets, right? I will update you in my Instagram. All right. Good evening, good evening, good evening. Okay, now let's start this session. So today we're going to talk about do my webinars, right? So the first half of the webinar, we go through the slides. The second half of the webinar, what we'll be doing is we will be doing a live trading, right? We'll be going through, we'll be doing market analysis, right? We'll be doing, we'll be looking for trading opportunities, right? To take some trades together, okay? Now, let's start with chart patterns. Okay, so learning points today, right? We're going to learn about the common chart patterns, right? Reversal chart patterns and trend continuation chart patterns. All right, so there are different types of chart patterns, right? Reversal chart patterns and continuation chart patterns. Now, sorry, just really, really hot. I don't know why. It's really, really humid. Okay, so anyway, right, we got the head and shoulder patterns. Now, common chart patterns, we got the head and shoulder patterns. We have the inverse head and shoulder patterns, right? We have the double bottom and as well as the double top. All right. So I know, right, for those of you who are new to trading, right, actually you must be thinking, hey, actually what this fella is talking about? What head and shoulders, right? I only know the head, I only know the head and shoulders soap, right? The shampoo, right? Okay, but don't worry, guys, right? And of course we have the double bottom and double top, right? Double bottom, double top, tops and bottoms. Nah, I should not go into that. Okay, so reversal chart patterns, right? So this is what we call the reversal chart patterns, right? So we got the common chart patterns, we got the reversal chart patterns, right? Okay, so just now the common chart patterns, right, is also found in reversal chart patterns, right? It's also what we call reversal chart patterns. Okay, so we have the head and shoulder, we have the double top and double bottom and inverse head and shoulder. You can see that actually double top and double bottom, right, is actually the same. It's just that it's just tombalik, right? It's just a reverse image. Okay. Likewise, okay, head and shoulder patterns is an invert. The inverse head and shoulder pattern is just a mirror image, right? And of course, we have the rising wedge and falling wedge. Now, before we move on to rising wedge and falling wedge, right? I just want to bring your attention, right, to double bottoms and double tops. Okay. Now, so double top, double bottoms, head and shoulder, and inverse head and shoulder, they have something in common. Now, can anyone tell me what do they have in common? Can anyone tell me what do they have in common? Just look at the chart over here, right? Look at the double top, double bottom, head and shoulder, and inverse head and shoulder, and tell me what do they have in common? Right? Look at the chart over here, double top, double bottom, head and shoulders, and inverse head and shoulder. What do they have? What do they all have in common? I give you guys a hint. I give you guys a hint. It's a word. What's the word? What's the common word that you guys see over here? What's the common word? So look at double top, double bottom, head and shoulders, and inverse head and shoulder. What is the common word that you guys see over here? M? Is that M? No, it's not an M. It's a word. It's a word. It's not an alphabet, it's a word. Neckline. That's right, Kelvin. Very good. What about the rest? Yeah, actually, I also say the answer yet, so not fun. Okay, so now double top, double bottom, right? What we have in common, right, is the neckline. Okay, you can see neckline. Now the neckline is so very important, right? And of course, the neckline is very important, right? Because we will then determine where our entry is, right, on the neckline. And this is important, right, for you to learn how to trade double tops, double bottoms, and head and shoulder patterns. Okay. 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 So now let's look at. So now we have went through the double top, double bottom. We've went through head and shoulders. We've went through inverse head and shoulder. Let's talk about falling wedge and rising wedge. Okay. So let's look at rising wedge. Right. Let's look at rising wedge. So rising wedge is a chart reversal pattern. Now, what is the characteristics of a rising wedge? So I'm going to point it out for you, right? So we have, so first one over here, we have what we call a bullish impulse. Okay, we have a bullish impulsive move. Wait, now let me just choose my color very, very carefully. Okay, very good. Okay, so this is what we call a bullish impulsive move. Okay, so we have a bullish impulsive move followed by a rising wedge. Okay, and this is what we call a rising wedge. Okay, so you can see over here, right? The rising wedge. The rising wedge, it looks something like that, right? So it is moving towards the upside, and that is why it's called a rising wedge. Now, for the falling wedge, yeah, this is a little bit more simple. Now that you understand what's a rising wedge, right? So we have a bearish impulsive move. And then we followed by a bearish wedge. Okay. So this is what this is the difference between this is the characteristics, right? Now, Nicole, why are these called reversal patterns? What's reverse? Okay, so very good question. Now, why are these called reversal patterns? Okay. So now, what do I mean by reversal patterns? Okay, so imagine, right? The price goes up. Okay, price. Oh, where's my pen? Sorry. Okay, where's my pen? Okay, price is going up, right? And then of course, price may do something like that, right? So now, over here, the price action is bullish, right? Going up is what we call bullish, right? Bullish. So this is what we call a bullish price action. Okay. Now, what happens here is that this, when you spot this, right? When you spot this chart pattern, right? Now, what does this look like? What does this chart pattern look like? What does this chart pattern look like? Head, shoulder, that's right. So now, when you spot this head and shoulder pattern, right? Then of course, it gives you a clue that price might be reversing down towards the downside, right? So just now it was bullish, right? Oh, sorry, where's my pen? Pen. Okay, right. Just now it's bullish, right? And then of course it might reverse towards the downside, right? So just now it's bullish, now it is bearish, right? So now price is going down, and that is why we call it a reversal pattern. Okay, right? So price actually reversed from over here, right? And now, where is the neckline? Where is the neckline over here? So the neckline it looks something like that. Okay, so sorry, hold on. I accidentally move on to the next slide already. Okay, there you go. Okay, so this is the neckline. So you can see actually the neckline, right? It doesn't have to be straight, right? It can be a little bit like a trend line, right? It doesn't have to be a horizontal line, right? It doesn't have to be a horizontal. It can be what is it called? Sorry, my English is not working right now. It can be horizontal. Okay, what's it next? Vertical. What's the other word? Horizontal, vertical. Yes. Diagonal. Yeah, diagonal. Sorry, my English is failing me tonight. Okay, so it can be a diagonal line instead of a horizontal line. Okay, so line can be diagonal. Yes, very good. Wow, Nico. I like you already. Very good. Yes, Mingyan, let's look. Okay. So line can be also can also be a diagonal line. Okay. It doesn't have to be a horizontal line, right? Okay. So now if it's like that, right? If it's like that, then of course I think what we can do is we can have our entry here, right? That means we can take entry here, place our stop loss here, and then our target probably somewhere around over here, right? So this is our entry. Just putting E for entry, S for stop loss, SL, and then of course TP for take profit level. Okay, cool. So this is what we call reversal, right? So the word reversal is exactly what it means, right? It reverses from the previous trend, right? It reverses from the previous trend. So if the previous trend is an uptrend, then it reverses, and then of course it goes down, right? If the previous trend is a downtrend, it reverses and then goes up, right? And this is why this is why it's called a reversal chart pattern. Okay, right? So all these are very, very useful. Even till today, I'm also using all these chart patterns, right? But of course, I don't solely rely on all these chart patterns to trade, right? I still have there are still a lot of things, right, to add together, right, and then it forms a trading strategy. Okay, right. Now, trend continuation and chart pattern. All right, sorry, trend continuation chart patterns. Now, trend continuation meaning to say that, right, it continues the previous move, right? It continues the previous move. So it is, if you can see here, right, price is going up, so price is bullish. And then of course, this is a trend continuation pattern, right? And of course, we will be expecting to push towards the upside, right? So later, right, I will show you guys something, right? When if you are not sure, because honestly, right, if you ask me, right, sometimes even myself, I also forget, right? I also forget, hey, what is a bullish pattern? What is a falling wedge? Right, everything, right? I think life is too short, lah. I think life is too short to go and remember all these things. Okay, so later I'll show you guys, right, how I remember, right, the lazy but effective way of remembering things, right, of getting both sides of the trades. Okay, right. So first thing first, we have the falling wedge. Now the falling wedge, right, what we have is we have a bullish impulsive move. Okay, so we have an impulsive bullish move, right, followed by a bearish wedge, right? So bullish impulsive move followed by a bearish wedge, right? Once it breaks out, we can place our entry here, target here, and then stop loss over here. Okay, rising wedge. Okay, so falling wedge, we have rising wedge. Now you see, the falling wedge and rising wedge, right? It's a little bit different, right? Right. So this is rising wedge just now. This is the falling wedge just now. But this is the falling wedge now, and this is the rising wedge. So this rising wedge is a reversal pattern. This falling wedge is a reversal pattern. Okay. However, this falling wedge is a continuation pattern. Okay, and this rising wedge is also a continuation pattern, right? Hey guys, don't worry, don't worry. I will send you guys a chart pattern cheat sheet later. Can or not, guys? Okay, I'll send you guys a chart pattern cheat sheet later. Right, so don't have to worry. Okay, all you got to do is okay, let me see. Now what you got to do is go to this link. Let me just copy and paste it real quick. Okay, so go to this link. Go to this link and scroll all the way down and click contact me on Telegram. Okay, once you have once you are there, right, just send me a message here. Hi, I am from the XM webinar. I would like to request. I would like the chart pattern cheat sheet. Okay, chart pattern cheat sheets. Okay, and chart pattern cheat sheet. Right. So later I'll send you guys I'll send you guys a cheat sheet, right? So it's easier for you to reference from, and of course it's easier for you to do some self study and kind of learn it yourself, right? Okay. So now we have bullish rectangle and we have bearish rectangle, right? So same thing, right? We have a bullish impulsive move towards the upside, right? And then of course will be followed by an entry, stop loss, and then of course a TP target, right? Bearish rectangle, right? We have a bearish move followed by consolidation, right? And of course we are looking to take, we are looking for the trade. Sorry, we're looking we're looking for the price to come down lower, right? That's why this is called what we call a continuation pattern, right? And of course, we have bullish pennant and bearish pennant. Okay, so same thing, right? It's very very similar to the falling wedge and the rising wedge, right? For the bullish pennant, right? Bullish pennant and bearish pennant. Okay, so very very similar. Now, all this might seem very very confusing, right? If I was you mean if I were you, right, I also very confused. Right? I cannot remember every single thing. Right? Okay, don't worry that. I'm going to share with you guys a secret, right? A hack. Okay. Okay. So let me introduce you guys to bilateral patterns. Bilateral patterns. Did I pronounce it correctly? Bilateral patterns. Yeah, bilateral patterns. Okay, so I'm going to introduce you guys to bilateral patterns. Okay, now what is bilateral patterns? Bilateral patterns, right? Now, although by right you can only use it on the ascending triangle, descending triangle, and symmetrical triangle, right? But hey, who is stopping us from using bilateral patterns now? In order for you to understand what is bilateral patterns now, you see, bilateral patterns basically we can trade both sides, right? If it breaks out, right? If it breaks out, If it breaks out, we can take buys. If it breaks down, we can take sells. Now I'm going to give you guys an example, okay? Right? So hold on. So basically, what we can do is that we can trade either side, right? We can trade both sides, right? So if it goes up, we can trade. We can take buys. If it goes down, we can take sells. Okay. Right. So now, if we go back to this, this is a trend continuation pattern. Okay, hold on, guys. 1 second. Because the inflation numbers is out. Just give me 1 sec. Okay. Right. Okay. Now, guys, let's take about 5 minutes, right, away from the slides. Okay, just give me 1 second, right? Because now we have heavy news coming out. We just had heavy news come out, right? So we have inflation rate, right? Inflation rate remained at inflation rate actually dropped, right, from 3.5%, right? And of course it made its consensus at 3.4%, right? And then of course we have core inflation rate at 0.3%, right? Which is at its consensus. So it did came down a little bit. Retail sales, right? Retail sales actually it's worse than expected, right? And of course we have inflation rate month on month, right, coming down, right, lesser than consensus. So the US dollars actually weakened a little bit, right? Of course we have CPI numbers coming on as well, right? So now I want to take a look at the just give me 1 second. Okay, I want to take a look at the some of the numbers, right? Some of the US dollar pairs, right? US dollar pairs. Where are you? There we go. Okay. Okay. So for those of you who don't know, I am currently on a Euro USD short right now. We are currently still in this position and running, right? Okay, we are currently running, right? The position on Euro USD is currently active. I will also be looking to take shots, right, on NZD USD, right? So I'll just set an alert, right, just in case I missed out. Very nice. Okay. Okay. Cool. All right, now let's get back. Don't worry, right, guys. Don't worry, Quintana. Okay, come. Let's get back to bilateral patterns. Okay. Okay. Now let's get back to bilateral pattern. You see, so as I was saying, right? So what you can actually do, right, is you can actually set, okay, say, let's say for example, right, let's say for example, falling wedge. So this is an example of a falling wedge. My drawing may not be the best, but I will try, okay, I'll try. So, and then of course we have like this, oops, sorry, wrong. So we have a falling wedge. So this is an example of a falling wedge. Okay, so this is an example of a falling wedge, right? And then of course, if we were to use this red color, and then of course we draw like that, right? So this is what we call a falling wedge. Okay, this is what we call a falling wedge. Now, the thing is, if you're unsure if it's going to break up or down, what you can do, right, is actually you can set this thing called a buy stop order, right? And then of course it will automatically helps you to buy, right? It automatically helps you to buy when price breaks out, right? When price breaks out. Okay. So when price reaches this level here, this is your entry, right? This is your E for entry. Right? This is your SL, stop loss. And then of course this is your TP. Okay, and this works, right? No matter if it's a continuation pattern or a reversal pattern, right? It works the same. Okay. Works the same. Now, what about if it goes down? If it breaks, it comes down, right? If it comes down, right, what you can do, right? When you actually see a chart pattern, essentially what you're waiting for is you're waiting for price to actually break out. Okay, let me just choose my color again. Choose a pink color. Okay, so essentially what you're waiting for is you're waiting for price to break up towards the upside. Then you take a buy over here. So this entry will be a buy, right? I'll just put a buy as a B. Okay, or you're waiting for price to come down, right? And then your entry, this would be a sell as, okay. Yeah. So this will be a buy and this is a sell, right? So when price comes down, then of course you can take short positions, which is sell positions, right? And of course, if price breaks out towards the upside, then of course you can take buy positions. All right. Any questions? Any questions? Awesome, awesome. Okay, very good. Now I'm gonna give you guys about I'm gonna allocate some time right for questions. Okay, probably around I'll say 1 minute or two, right? If you have any questions, just type it on the questions below. Right, before we move on to live trading. Can I, guys? Okay, so before we move on to live trading, and then of course I'll look at some of the trades that we are currently in, right? And some of the trades that we are kind of looking to enter together. Okay. I'll give you guys some time for Q&As first. Okay. And 2 minutes starts now. Okay. So, nobody has questions? Everyone is okay? Vivian, Nicole, William, and then Kelvin, John, Frank, Gary, William. Everyone okay? I don't know why the weather in Singapore is a little bit crazy, right? It's hot, but it's hot, but even if it rains, it's humid and hot. Okay, boss. Yeah, I'm good. Okay, all right. Now let's not waste any more time. All right, so let's because I only have 1 hour with you lah, right? Every day I only have 1 hour with you guys. Right, so let's not waste any more precious time. Okay, so Euro USD, we are currently in this trade. Currently, it's floating around break even. First trade got stopped out, right? But it's okay, right? We still have our second trade. So second trade, we are currently still in this trade. Currently, it's currently floating at break even, and our final target is at about 1 to 12.5, right? Risk reward ratio in profit, right? Of course, it might take quite a while for it to get there, but I think and I believe, right, that it might get there eventually. Probably it will take probably 2-3 weeks, right? Like 2-3 weeks, depending on the volatility of Euro USD. And this is how I trade, right? So, I usually hold a trade few weeks or a week, 1 week, a few weeks, or even a few months, right? And of course, but then of course the risk reward ratio is higher, right? So like the USD JPY trade that we took. Oh, okay. So there's only this trade. Okay, but there's another trade on USD JPY. It was a 1 to 66 risk reward ratio and profit, right? That one hit take profit level already. This one also, right? 1 to 20. It also hit take profit level. Euro USD, this is a 1 to 12.5, right? Meaning to say that if you're risking 1%, right, your potential rewards is a 12.5%, right? So Euro USD, we are already in this trade now because currently price is still floating at break even, right? For those of you who wants to follow the trade, can go ahead and do so, right? Now, okay, for those of you who wants to follow the trade, but of course you guys don't know how much position size you should be using, right? What's your position size that you should be what is the position size that you should be using, right? Just go ahead and go to this position size calculator, right? So calculate enter the currency pair that you want to trade, right? And then of course, select your account currency. For me, right, and all my accounts, I'm using US dollars, right? Account size, it depends on what account size you have, 10,000, 100,000, so on and so forth, right? Then of course, risk ratio, right? I would say risk ratio is how many, what is the percentage, right, that you want to risk, right? If you want to risk 1%, go ahead and do so. But I would say do not go anything above 2%, right? 2% is already considered high risk. I would say 1%, probably you'll feel more comfortable with it, right? So I would just recommend 1% risk per trade, right? Don't go anything above 2, right? If 2% also not really recommended because a bit high risk, okay? So, or if you want to risk lower, by all means, go ahead, right? For me, I am currently risking 0.1%, right? But of course, because I'm trading, I'm trading my own capital and I'm trading my investors' funds, right? That's why we are actually risking really, really small, right? 0.1%. Okay, but if you want to risk 1%, go ahead and do so. And then, of course, we have the stop loss number of pips for the stop loss, right, is 20. And once you are done, just click calculate, and of course, your position size will automatically be calculated for you. Okay. Awesome. Okay, cool. There we go. Okay. So this is the Euro USD trade. Right? So stop loss is 20 pips away. But currently it's just, I mean, if you look at the price now, it's like what, 10 pips away. But yeah. I mean, it might work out, it might not work out, but who knows, right? But of course, what we can do is just hope for the best. If it works out, very good. If it doesn't work out, we live to fight another day. Cannot, guys? Right? Because now, I think this week has been, I think this year, right? This year, every single month has been profitable, right? We, out this year, let's say in May, right? This is like the second week of May. Second week of May, so we have like what, 4, 8, 12, 16, 18. So we have like 18. I mean, this is about the 18th week of the year. And is it 18 week? I don't know. But anyway, from January to May, right, we probably only have like 3 losing weeks, right? But it's just a losing week, but of course a profitable month, right, in total. Okay, now moving on. Now, just now I was looking at NZD USD. Okay. So NZD USD also not really it's not. Hey guys, can you guys hear the background sound? Just wondering. Can you guys hear the background sound? Is there a background sound? Is it noisy? Is it okay? No? Nobody can hear anything? Okay. Okay. Cool. Because I don't know what I don't know what the mic picks up, right? Because I don't know how sensitive the mic is. Okay. So now if we were to look here, NZD USD. Actually NZD USD now, why was I interested to look at this pair? Okay, very, very simple. We have multiple key levels here. Let me check. Let me just find my key levels real quick. Okay, yes. So we have multiple key levels here. Have, but not so loud. Not noisy. Okay, thanks. Right. So we have multiple key levels here. And I'm actually looking to take short positions on NZD USD. Now, where is my... Okay, there we go. Okay, so if we're to look at NZD/USD, right, actually there is two key levels, right? One is the one that I've drawn on the first one over here, and second one is over here. So now, why did I draw a key level here? Okay, the reason very simple. You can see that at this level, price interact with this level quite a lot, right? So we have price interacting here, here. So this is what we call a break and retest, right? So the price made a resistance here, broke above, retested as support, and of course come back down, right? Again, same thing for over here, broke above, retested, right? And this makes it a key level, okay? And for this key level, it's very, very simple, right? This is what we call a resistance level, right? So price broke above, came back down, retested, right, as a resistance. So resistance. So this is what we call a key level. Now, for the key level, what we want to do is we want to be able to take short positions on key levels. Now, why do I want to short NZD? Sorry, why do I want to short XXX and USD, or let's say XXX Euro XXX or Euro USD, right? So now the reason is it has to do with fundamentals, right? So now I don't know if you guys know this, but the US is going through elections right now, right? So we have like I think there is I think there is an independent candidate. So number one, there's an independent candidate, and then of course we have Donald Trump, and we have Sleepy Joe, right? Sorry, Joe Biden, right? So we have Donald Trump, we have Joe Biden, and of course, the market, right? The market favors Donald Trump, right? And the market sees if Donald Trump wins the election as a dollar bullish, right? We need to say that the US dollar would strengthen if Donald Trump were to get elected. So we have all this type of fundamental news coming in. Now, this is one part. The other part is the inflation, right? So if inflation is coming down, right? If inflation is coming down, then of course the Federal Reserve will not hike up the interest rates anymore, right? Or it will just maintain current interest rates to lower the inflation. Or as time goes by, if inflation comes down by a lot, then the Federal Reserve might cut the interest rates as well. Okay, so when the Federal Reserve cuts interest rates, right, it makes borrowing less expensive, because right now borrowing is expensive, because right now high interest rates, or if they maintain interest rates, right, borrowing is expensive, right? If you want to take up a house, a mortgage loan, if you want to buy a car, you take up loans, right? Okay, so loans is now expensive, so less people is likely to take loans. When people don't take loan and people don't leverage on loans, right, to kind of stimulate the economy, then of course this is when the economy slows down, right? When the economy slows down, then of course the US dollar would weaken. Okay, so this is fundamentally. Now, if we were to look at NZD/USD, right? NZD/USD on, let's say, the weekly chart. So NZD/USD on the weekly chart, we can see that price is going down, right? From over here to over here, price is going down. So we are in a bear market right now for NZD/USD, meaning to say that New Zealand dollar can buy lesser and lesser of US dollars. That means US dollars weaken or strengthen. That means US dollar strengthen. Okay, US dollar strengthen. That's why NZD, right? New Zealand dollar can buy lesser of New Zealand dollar can buy lesser of US dollar, and that's why NZD/USD is going down. Okay, so when NZD/USD is going down, ultimately I would be looking to take short positions, right? I'll be looking to take short positions on NZD/USD. Okay. So ultimately, I'm thinking, right? Okay, NZD, Euro USD, or I mean Euro USD. Sorry, the US dollar would strengthen, right? And of course, I'm shorting XXX US dollars. Okay, and I'm be looking to take buys on USD XXX, right? When I say XXX, it means USD versus other currency. Okay, now where would my short position be? Okay, let me just this was a temporary. My English is failing me today. Right? This is a temporary alert, right? So let's go ahead and set a sell limit order, which I will be doing as well. Okay, now because these two key levels, right? These two key levels are so close to each other. What I'll be doing is I will making it one, I will make it I'll make it so instead of making it two, instead of making these a two trade, right? I'll just make it a one trade, right? At a 40 pips 40 pips stop loss. But what I will do is I will double my risk, right? So instead of risking 1%, right, I'll be risking 2%. Instead of risking 0.1%, I'll be risking 2% on this trade. And where would my take profit level be? Okay, my take profit level will be somewhere that makes sense. Oops. Okay, so my take profit level would be somewhere that makes sense. Now, it would be somewhere around here, giving us a really nice potential 1 to 13 risk reward ratio. Okay. So I have my I have my entry here, and I have my TP over here. Okay. So now why did I choose to enter? Why did I choose to put double my risk over here? Now, the explanation is quite simple. Right? The explanation is quite simple. So if let's say I have if let's say I have a 20 pip stop loss over here, right? And then I have another 20 pip stop loss over here, right? So isn't it the same? So let's say if I have two positions, right? Two positions, right? So two positions. So my so you see the stop loss and my second entry, right? My stop loss and my stop loss for the first entry and my entry for the and my entry level for the second entry is the same, right? 0.613300, right? So instead of having two trades like that, right? What I could do, right? In order to save on commissions, right? Because I don't want the broker to earn so much money, right? To earn so much commission, right? What I can do is that I can, instead of putting two trades, I can put one trade, right? Increase my stop loss to 40 pips, right? Double my stop loss, right? Essentially doubling my stop loss. And instead of risking 1% on a 40 pip, I'm risking probably 2% on a single trade, right? Right. So 2R, right? This is how I calculate, right? 2 units of risk, right? When we talk about RR, we talk about risk reward ratio, right? Risk and reward. So this is what we call a 2R risk. 2 units of reward. Sorry, 2 units of 2 units of risk. 2R. Let's put 2R. 2R. And then of course our potential is, so if this is 2R, our potential is not 13R anymore. Right? Our potential is 26R. Okay. So 2 to 26 is it will give you 1 to 13 as well. Right? It's just that because over here we double our risk, over here we also double our reward. Okay. So this is for NZD USD. Okay, I'm just going to put it as a pending order. Okay, and then of course we will see how it goes, my friends. A bit of a cough and phlegm from the flu I got on Monday. Or is it Sunday? Okay. And then of course we have USD CHF. I think USD CHF we don't have to worry about it so much, right? It's quite far away from our profit, so from our entry. So this one I'll go through it tomorrow for those of you who wants to follow the trade. It's not really that urgent. Now Euro USD is something that I really hope that it will work. But if it does not work, I'm not gonna cry over it. I'm just gonna move on to the next best trade. Yeah, because it doesn't make sense. I think probably the last try I would try to short it, right, would be at this level here. Let me just mark it out in red. Probably the last key level, probably the last level I am going to short it would be somewhere around here. 20. Yeah. And then of course, if that fails, then of course I will not be taking short position. Then of course I'll just wait for NZD USD, right? Because I think NZD USD, same but different, right? I think NZD USD has also a decent chance of surviving as well. I mean, of profiting, right? So, if Euro USD hit my stop loss, right, I'll be looking to take one more short position over here at 1.8820. Okay, and then of course, I will also, and of course, I also have pending positions on here on NZD USD, right? On NZD USD. Okay. Cool. Right. Then of course we have GBP USD as well, and we have AUD USD, which AUD USD not really. I don't really want to take trades on AUD USD. I mean, it's quite messy at the moment for AUD USD. I mean, although it's bearish, but I mean, price has been consolidating around here for quite some time, right? I think since since about February. Yeah, so since February, price has been consolidating at this area here. So I will not be looking to take trades. Yeah, I think for now, Euro USD and NZ USD is sufficient, right, to take shorts. And I don't want to I don't want to overexpose myself, right, to any single currency at any point of time, right? Now, what do I mean by overexposure, right? Because I have Euro USD and I have NZ USD here already, right? So I don't want to be overexposing myself, right, on just one single currency. Okay. All right, ladies and gentlemen, unfortunately, this is all the time that I have for you guys tonight. Hope you guys enjoyed this session of the evening webinar, and hope to see you guys tomorrow, right? If you have any questions, right, just drop me a text on Telegram, right? And of course, I'll do my best to answer you as quickly as I can. Right? You guys should see my Telegram, right? It's usually flooded with message, but don't worry, right? For those of you who have sent me a message, right, asking for the candlesticks, right, for the chart pattern cheat sheet, I have received your messages, right? So don't worry, right? For those of you who have not sent me a message on Telegram, right, can go ahead and do so. Just go to this link, scroll all the way down, right, and then just introduce yourself, right? I mean, hey, I'm from the XM webinars. I would like the chart pattern cheat sheet, right? Okay. All right. So I'll see you guys tomorrow, 8 p.m. to 9 p.m. And hope you guys have an amazing evening. Okay. If that's all, wish you guys have a good night, and good evening, and good night.